My guess would be the tax cuts are going to get approved. They're going to increase the deficits. I don't think we're going to have meaningful spending reductions. And even if we have some, they'll be, minor compared to the automatic increases that we're going to get in Social Security and interest on the debt and Medicare and all that. And so I think we're going to have bigger deficits, more inflation, and that's going to be positive for gold. My bet would be that you're going to see a bigger gain in the price of silver relative to the price of gold. I expect, both metals to rise. I expect all metals to rise because I expect the dollar to fall, but I expect the euro to fall. I expect the pound to fall. I expect the yen to fall. And, and I expect Bitcoin to fall.
The dust has begun to settle after Trump's election win. After the result was announced, the price of gold dropped, temporarily pausing the bullion's record-breaking rally, and then rebounded. Despite these fluctuations, the long-term investment case for the precious metal is still strong. However, the balance between supply and demand drives silver prices. As of late October 2024, the price of silver has increased by more than 40%, surpassing gold's 33% rise. Regardless, it is still far from its all-time high of $49.80 in 2011. Technically, compared to the rally in 2010, when silver rose by 80%, there is still room for growth, especially if current tensions persist. Financial commentator and expert PeterSchiff argues that meaningful government reforms under Trump could strengthen the dollar and weaken gold, but such changes are unlikely. He expects rising deficits and inflation, with minimal spending cuts. This, he believes, will support higher gold prices. In the run-up to the election, political uncertainty helped to drive up the demand for and the price of gold. This is because yellow metal is a widely recognized safe asset. For example, when the polls showed Trump and Kamala Harris neck and neck on 31st October, 5 days before the election, gold hit a high of $2,790.15. Based on current trends, PeterSchiff highlights the historical gold-to-silver ratio, suggesting that silver is undervalued compared to gold. He doubts silver will stay this cheap relative to gold and expects its price to rise significantly, outpacing gold. He predicts both metals will gain value as major currencies weaken. Additionally, he foresees Bitcoin eventually declining. The usual gold-to-silver ratio falls between 50 and 70, but if it approaches 80, it suggests buying silver. The current trend signals an increase in the value and use of silver as the gold-silver ratio is trending down. Now we present the clips of PeterSchiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
If you go historically and you look at the relationship between gold and silver, because, that relationship has been around for hundreds of years. And if you measure the price, how many ounces of silver can you buy with 1 ounce of gold? Silver's pretty cheap right now. And so if it simply reverts to the mean, you're going to have a bigger gain in silver than you would in gold. Now, there's no guarantee. Maybe things have changed now. Maybe silver is permanently cheap relative to gold. I tend to think that that's not the case and that silver is going to have its day. My bet would be that you're going to see a bigger gain in the price of silver relative to the price of gold. I expect, both metals to rise. I expect all metals to rise because I expect the dollar to fall, but I expect the euro to fall. I expect the pound to fall. I expect the yen to fall. And, and I expect Bitcoin to fall. If Trump actually succeeds in, let's say, slashing government, actually making a meaningful cut in government spending, I don't expect that to happen, but let's just say that it did happen. And maybe he even got rid of the income tax and replaced it with some kind of excise taxes or sales tax, tariffs or sales tax, something like that. And there was major deregulation of the U.S. economy. I think that would be bad for gold. I hope that happens, but it will be bad for gold. It would be good for the dollar. I just don't see that as a realistic possibility, given where we are, given the amount of debt that we have, and given the campaign that Donald Trump won, which was one of, gratification, an immediate boom. I know that in order to do the things that need to be done, we have to suffer through a pretty severe recession early in the process. And, that's not what, Trump prepared the electorate for. I don't think he has a mandate for that. And I don't think that's going to happen. But, in theory, it could. I don't think the tariffs that they're going to put on are going to reduce our trade deficits any more than the tariffs in his first administration. which are still here, by the way. I mean, Biden didn't repeal a lot of those tariffs, and we have the record trade deficits right now. So, the trade deficits are 50% larger today than they were when Trump first took office in 2016, despite those tariffs. That has to do with the erosion of our own manufacturing base, which continues today, and we grow more and more dependent on the manufacturing infrastructure of the rest of the world. And so I don't think the tariffs are going to achieve their stated goal. My guess would be the tax cuts are going to get approved. They're going to increase the deficits. I don't think we're going to have meaningful spending reductions. And even if we have some, they'll be, minor compared to the automatic increases that we're going to get in Social Security and interest on the debt and Medicare and all that. And so I think we're going to have bigger deficits, more inflation, and that's going to be positive for gold.
In his analysis, PeterSchiff argues against simply abolishing the Federal Reserve and handing Congress control of the money supply. He further supports a return to a gold-backed monetary system with stricter rules and limited government involvement. Project 2025 argues that a return to the gold standard should be strongly considered. From 1879 through 1933, the United States was on the gold standard. Most major nations, including the United States, backed their currencies with gold. The creation of the Federal Reserve had little, if any, effect on the gold standard. The gold standard was implicitly built into the Federal Reserve's framework, as the law required the Federal Reserve to hold gold equal to 40% of the value of the currency issued. Since gold is a finite natural material and must be mined and processed at a significant cost, it tends to be produced at levels consistent with demand. Under a gold standard, creating more currency requires obtaining more gold, which raises gold's market price and stimulates increased mining. Let's get back to the interview.
So if you're saying, should we get rid of the Fed and just hand the printing presses to Congress, or to the president? No. I mean, as bad a job as the Fed has done, Congress or the president would be even worse. So we can't just get rid of it in a vacuum. We have to know what's going to replace it. Now, if I knew we were going to replace it with nothing, if we could go back to the monetary system we had before the Fed, I'd be all in favor of that, because that's when, we're on a gold standard. The federal government wasn't involved. There was no central bank, and paper currency was created by private banks, and it was all backed by gold, right? So everything was good, and the government wasn't involved. But in fact, even if we went back to the original Federal Reserve Act, the way it was originally conceived and passed, that would be a big improvement, because the original Federal Reserve Act made it illegal for the Federal Reserve to own any U.S. treasuries or any obligations of the U.S. government. And all the Federal Reserve notes had to be backed 40% by commercial paper and by gold. It was actually an honest central bank. It wasn't part of the federal government. It was a private banking syndicate that was chartered to issue this currency backed by real money, gold. And it was supposed to be better than having all these other banks, because what the Federal Reserve did is they rediscounted the notes of other banks. So instead of, because let's say I took a train from New York to California, and I wanted to buy something, and I went to a store, and I had a note from some bank out on the East Coast, and the store on the West Coast never heard of that bank. Hey, how do I know that's legitimate? The whole idea was, we'll all take our bank notes and bring them to the Fed, which will reissue it, and now we'll have this Federal Reserve note that everybody recognizes. And it would, so it was supposed to improve the system. It was also supposed to provide for an elastic money supply. People don't realize this. What the original idea of the Fed was, when the economy was growing, they were supposed to expand the money supply along with the growing economy. But when the economy contracted in a recession, they were supposed to shrink the money supply. They do the opposite now. They grow the money supply when the economy is expanding, and then when it contracts, they grow it even faster. So, I mean, it's nothing like what it was supposed to be, what it was intended to be. In fact, if they proposed what the Fed is doing now, they never would have enacted it. No congressman back in 1913 would have voted for it. But unfortunately, it's a monster now that we have. It was, the camel's nose under the tent. So I would really like to reform it. It'd be great to abolish it, but, not if it means that we just have the government take the reins.
Looking at the precious metals from a broader time frame, precious metals prices have been pushing consistently higher, shattering records and defying expectations over the last 12 months. Gold is now experiencing its strongest rally in over 40 years, and silver is on course to have its best year since 2008. The long-term outlook for hard assets remains positive, with several factors likely to sustain the upward trajectory of prices into 2025 and beyond. What are your thoughts on investing in precious metals like gold and silver in today's economic climate? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.